what happened in 2024 with the election of Donald Trump is that the world is not going left or right, but America is turning inward for the first time.
Is US exceptionalism ending? Do you see the US market topping out?
Donald Trump and his MAGA crowd are going to learn a very hard lesson in economics. When economics meet reality, economics is going to win. It's just, it's like when the Titanic hit the iceberg won. The European markets are all at lifetime highs. So there's something going on in Europe. There's a very old saying in Germany, which goes as follows, that a lot of Germans don't believe in God, but every German believes in the Bundesbank.
Are we in for a chaotic period in the near term in markets?
I think as Aldous Huxley described in his famous book, A Brave New World. I think that's the reason I said that the world has shifted on axis. So it requires us to have new hats, new thinking. I do not believe in particularly the wealth created through gold or through real estate or through any other asset class. Equities long-term always deliver a superior rate of return.
Markets go up, markets go down, sometimes a non-stop rally, at times a correction all around. It's been a while since we chatted, so I thought I'll come back again. I'm Surabhi Upadhyay. This is Market Café. Let the conversation begin. Sir, thank you so much for taking out the time and joining in. I can't tell you how excited, happy, and I'm really looking forward to this conversation.
Thank you so am I, Surabhi. Thank you for inviting me. It's always a pleasure to be on your show.
So with you, we're actually starting the second season of Market Cafe, and the whole idea about these behind these conversations is to keep them freewheeling, keep them, something that people can take away from and learn from, and who better than you? And I want to tell our viewers one thing. The reason why Mr. Damani has been on my mind consistently, at least for the last 4-5 months, and I'll tell you why. Allow me to quote that one line that you mentioned. So viewers, if you go back, and some of you might have seen that interview, the day Donald Trump was re-elected as the President of the United States, we had Mr. Damani on our regular programming for some thoughts and ideas. It was a big event. And I remember, sir, what you said that day. And you said that this is the most important, most seminal event in the global geopolitical theater since perhaps the fall of the Berlin Wall. What made you say that? What did you mean by it?
Yeah, thank you again, Surabhi. November 5th, I think the day Trump was elected, actually I felt the world moved on its axis. And let me just first set the context for you. We always live life looking forward, but we understand it backwards. What happened? I came of age in the late 80s in India, and we are part of what I call the blessed generation in India, the first generation since midnight children to enjoy economic prosperity and the fruits of independence, if you will. Because right after I joined the markets, the Berlin Wall fell, economic liberalization happened in India, India became a technology superpower. All things that should have favored us happened. I often say this to my children, that my father was just an astute stock picker as I was, but the markets were so small and indifferent that he could barely make a living in the markets at those years. But we were a blessed generation, the generation ahead of us is equally blessed. So I think for what really happened to understand life is that the world...
Thank you. Thanks.
The world lived in a globalized environment where we had a rules-based system, free trade, some very important organizations took place between the 1940s and the 1990s. For example, the Marshall Plan that rebuilt Europe and Japan took place. NATO, which was formed, which was a bulwark of security, and we had largely peace in our times. We had WTO and the free trade agreements, Bretton Woods, that allowed free trade and global trade to expand and enjoyed an unbelievable belief of prosperity. But central to all of that was America, whether it was the Marshall Plan, whether it was NATO, whether it was Bretton Woods, central to all of that was America. So whether America turned left or right, the world kept progressing with Democratic presidents, Republican presidents. But what happened in 2024 with the election of Donald Trump is that the world is not going left or right, but America is turning inward for the first time. And that has profound changes in the world because whether we like it or not, America is the most important, most significant player in the world today, whether politically or economically. But the fact that they were turning inward meant the world would be a very different place. So while I keep hoping that the past is prologue, that what happened in the 40 years that gave us so much prosperity and peace and a good standard of living will continue, I feel that the world is about to change. And I think as investors, we have to be the first to notice that.
Absolutely. And so I'll talk about America and what you feel about what's going on over there in a bit. But first, a slightly more wider question. A lot of the events that you described, right? Whether it was, the changes in America, the fall of the Berlin Wall. In your decades and decades of experience, does politics matter to markets?
There was an English economist, I think Turnbull was his name. He said that political expediency cannot replace the decisiveness of latitude and longitude. What he meant to say was that it doesn't matter which part of the world you're in. The political economy works as a political economy. The hard truths of the political economy. You got to earn a return on capital. You got to specialize in what you do. You got to be good at what you do, and you got to work with your neighbors to achieve all these things. And I think for a large part in India, we didn't know that. We had a very inward, insulating economy, which didn't prosper. I'm afraid America is going to that same inward-looking, of all people, it's astonishing for me to say that, but I feel that America is making that mistake, which India corrected in July 24th, 1991, when Manmohan Singh rose to give his first interim budget on the halls of Parliament. I think for 30 years after that, we've enjoyed unparalleled fruits of that prosperity. And it didn't matter which government was in power. We even had the communists in power in 2000 in India. Despite that, the Indian economy grew, as some economists put it. The Indian economy grew at night. So it didn't really matter what happened.
So it's not so much about left, right, or center. It's not so much about your political stance. It's more about whether you are inward or outward looking, from what you're saying, whether you're integrated. And that's under cloud. I mean, the whole globalization era and that boom, that itself is under a bit of a question mark in this new world that we're in, right?
The good news is, the bad news is that yes, it's under a cloud right now. It's under a very serious cloud. That's why I told you the axis was changed. The good news is my personal belief and my personal call that these are irreversible changes, that you could delay globalization by another 3 years or 4 years. I doubt if it's even that long. You can delay a world where the strong prey on the poor, which is what is happening now with the spheres of influence, as Donald Trump is calling it, that Russia controls Europe, we control North America and South America, and China controls Asia. So all that is being questioned as we speak right now. But I think it will delay globalization, it will delay international system. It cannot deny it, because the human arc works towards progress. And it's very hard for me to believe that we will go back to a mercantilist policy, a tariff-based policy, as Trump is advocating. Either he will change, or democracy and the people's aspirations will force him to change. So while we are going through a very difficult period right now for the global economy, I don't think it's going to be the lasting change in the world. The lasting change is towards free markets, prosperity, trading.
Which is what we've seen, at least in my lifetime, and I've enjoyed the fruits of that.
We've all enjoyed the fruits, and that's just what an economic level. In India in 1990, I think the budget was 30,000 crore deficit. I mean, we do that in a day right now. So the economy has grown, we've all got great jobs, we all travel. I mean, here's an interesting anecdote, Surabhi. When I went as a student to America in 1977, that's the time India was completely inward looking, completely the whole mantra of self-sufficiency we had, which beats the hell out of me even today.
License Raj, whatnot.
License Raj, what do you have? They gave an Indian student traveling about $5 US. That's what he had. When he went abroad to America to study, you got $5 US in your pocket to spend.
$5 US?
$5 US a boy. That's
who gave? As in your parents or your family?
Actually, you filled out a couple of forms and they give you actually $5.
You could just carry $5.
$5. I repeat that for emphasis. $5.
This is which year? 1970?
77 when I went there. So I mean, we're a country of even then.
Well, what could you buy in the US with $5?
You could buy a few cups of coffee. I mean, forget everything else. I mean, you obviously had systems that didn't work. And I think in 1991, when they realized that you had to change the systems, I think that's what triggered unbelievable markets, unbelievable time for all of us. And I've been, part of that blessed generation.
Absolutely. So, of course, I want to talk to you about how to navigate this from a market perspective, because while these changes happen around us, I'll allow you to, sip a cup of your coffee. I think that's, some coffee you've got. I think I've got a little bit of a teapot for myself. So, I'm going to help myself to some tea. I'm very happy to hear your overall optimism on whether you can sort of delay it by a couple of years. But the whole globalization sort of wheels that were set in motion, they should
not
continue.
going away.
That's not going away, and that's reassuring to hear. But the fact is that we still have markets to navigate in the interim, right? Now, is US exceptionalism, for the time being at least, is it ending? Do you see the US market topping out?
I think so. I think Donald Trump and his MAGA crowd are going to learn a very hard lesson in economics. See, this is what he's trying to do if you try to sort out all the madness and see what is the kernel he's trying to do. He believes that American manufacturing has been hollowed out. America imports almost all its critical stuff other than technology from China, from Vietnam, from Philippines, from India, from other countries in the world. So this is what they've done. They first reduced the tax rates in America. They made the corporate tax rate 15% or so. They're jawboning the Fed to cut the interest rates. And they're building tariffs so that domestic industry can do well. So they want to bring back manufacturing and manufacturing jobs. That is the constituency that elected Donald Trump to America. Now, unfortunately,
it may not even be most cost effective, which is the debate.
It is not
right now.
It is absolutely not, and that's the whole point I'm making. That when economics meet reality, economics is going to win. It's just it's like when the Titanic hit the iceberg won. So economic reality is economic reality. You can't make jobs in America or pay people in terms of inflation when the same product will be available for 30-40% cheaper if you import it. It goes back to what Adam Smith said about specialization in the world. I think America, for all the leadership and intellectual leadership it's shown to the world, is losing that moral supremacy that it had in the world as the one superpower in the world, the one defender of democracy, the one the economy was so bright they could take everything. There's a saying that I often quoted, Surabhi, which says that, to first I'll quote Rudyard Kipling, who said this: "What does he know of Britain, who only Britain knows?" So the point being that if someone who's staying in Britain didn't understand Britain's role in the world, the sun never set on the British Empire. So those things, America has to learn. What does he know about America that only America knows? So he understands clearly the dissatisfaction in America, but the solution is not tariffs, protectionism, inward looking, no immigration. That is not the solution. The solution is more productivity, more freedom, more ability to integrate. And I think they will learn the lesson over a period of time. I'm convinced that while America is going through a very dark period, in my opinion, and I think it will put a dampener on financial markets, particularly in America for a while, I don't think this will be a lasting place in the world. I don't think the world is going to the dark ages.
Well, yes, absolutely. We hope so. That's sort of getting me to the next question. So if you're saying that for the time being, maybe there are some speed breaks on the whole American equity story. What we've seen in the past many, many years, that every time they say, America, sneezes, the world catches a cold. So if that were to play out, and let's say the American economy starts slowing down, American equity market starts faltering, in the past we've seen everybody falls. Could it be different this time?
No, we will falter. I mean, there's no doubt about it that America is such a big, important economy that when America
sneezes, the rest of the world catches a cold. It's very true, particularly in emerging markets. But I personally feel that given that these are now considered permanent changes in the world. So you see what's happening in the world. China, India, Russia created their own trading bloc called BRICS. France has already made a declaration that it would now be the nuclear armament of Europe.
Yes.
So these are important changes in the world. So if America wants to go backward, the world will move on. The world will figure out different alliances, different prospects to take. And no doubt that they will move on. It is to America's detriment to realize that they were the centrifuge force in the world, and they are relinquishing the space. History has told us that empires last for a century, 75 years, something like that, and then there's a new age born. And if America is conceding the role, water seeks its own level. So the world would seek its own level. There'll be other blocks, other interests going on.
But when eras change and empires fall and new ones take over, usually that period is also very, very chaotic, right? And I mean, now if I apply that to the direction of money flow, markets, I mean, there was this whole debate and something I was reading or hearing about how obviously it's the Chinese who hold a huge amount of American treasuries.
Yeah, they might not buy it. I mean, what happens to interest rates then in America?
So are we in for a chaotic period in the near term in markets?
I think as Aldous Huxley described in his famous book, A Brave New World. I think that's the reason I said that the world has shifted on axis. So it requires us to have new hats, new thinking, of how we want to, in the 80s, 90s, very simple what we bought. Anyone exporting in dollar terms, anyone globally facing were the businesses we bought because they were insulated from the poor domestic economy. But I think now we're increasingly looking at the domestic economy. This is a vibrant economy, whether it's in construction, whether it's in consumer spending. It's all parts of it are doing well. And I think we've learned the hard lessons which America is probably going to learn. So I think we'll just have to have new horses for new courses and figure out what will lead them. But having said that, would I remain invested in Indian equities? Yes, I remain invested in Indian equities because I think it's still the best option available for Indian investors to become wealthy. I do not believe in particularly the wealth created through gold or through real estate or through any other asset class. Equities long term always deliver a superior rate of return. So I think it remains there. You just have to see it with a new set of eyes and perhaps look at different sectors that perhaps you didn't look at in the last 20 years.
Okay, before we talk about some of those new approaches and maybe we all have to learn as investors, you mentioned Europe, and that's a really important point. I'm glad you brought it up, right? Again, stuff that at least I have not seen in my 20-year career, which is a lot shorter than your sort of long-term career. This whole talk about Germany rearming itself, spending 500 billion euros on infrastructure, the commentary coming out of France. Is this sort of a flash in the pan moment, and maybe you have tactical bounces here and there? German market's been doing well this year. Or could there be more to it? How would you say it?
In fact, amazingly, Surabhi, the one we didn't anyone expect, the European markets are all at lifetime highs.
Yes.
So there's something going on in Europe. There's a very old saying in Germany, which goes as follows, that a lot of Germans don't believe in God, but every German believes in the Bundesbank. The central bank of Germany was so inflation hawkish, so concerned with modern supply. But there's a seminal change in Europe. They realize suddenly they're naked. They don't have the defense of the US, which they've relied on so much time. See, first of all, the US, in my opinion, asking for increasing NATO contribution is valid. But saying that I will not support you unless you pay 2% of your defense budget or GDP budget to defense is basically the Indian police guy calling for hafta. That you want protection, you got to get hafta. It's not on. The leader of the free world can't be behaving like a regular cop in the streets. So Europe has realized that they are now on their own. So what is Germany doing, the largest economy in Europe? It is now stimulating its economy through defense and infrastructure spending.
They're easing up their debt caps, etc.
So it's a seminal moment. And that explains partly why the European markets are at lifetime highs, UK is a lifetime high. And France, I mean, these all worked under the US nuclear umbrella. All of them. And France has publicly said that they will now provide the nuclear umbrella that America is not providing to Europe. So these are seminal changes taking place in the world. And I think there will be on that, maybe defense stocks will do well because of that. Maybe infrastructure, electricity stocks will do out there. But the tide of human progress, whether it's through artificial intelligence, whether it's through globalization, will almost certainly continue to be. I mean, so it's foolish to try and say that, 4 years in the history of the world is just that I blink. So it'll pass.
Sure.
And good investors will be adept at navigating that.
Sure. Since you've very well explained to us why these are seminal tectonic events, really, aside of India, just for a second, if I were to ask you, which is the other market that you would like? Maybe you will take exposure, maybe not, but a market where you see there's serious potential outside of India.
I mean, I haven't, to be honest, the only two markets I focus on, India and America, because they're the most important markets to me. But just going through the data, I would say Europe would probably be starting a bull run, which is even I can't understand the conclusion I'm coming to.
A European bull market.
Yeah, or European bull market when it's facing the moment of crisis. But you remember in 1991, India faced this moment of crisis, and the index was below 1,000 then. Today it's 80,000. So sometimes bull markets are born out of that crisis.
Oh, phenomenal thoughts, and that's enough to think, a lot to think. But okay, let's talk about the approach to this market, and this is not a conversation about the next 1 year or 2 years, right? Like you're saying, we may have to wear new hats to deal with a far more complicated world, a more complicated market. Okay, what's your starting point in terms of advice?
Well, the starting point advice is, I belong to the generation that is more has been. We're now old and foggy, so it's more applicable to the young people. Because India is a young country, we have a demographic dividend that's coming our way because we're a very young nation compared to the rest of the major economies in the world. So it's more focused toward the young people. There are some basic lessons that seem almost childish to say, but I will repeat them for effect. The first thing is learn how to save. spend less than you earn. That's the first thing. The second thing is invest in appreciating assets, not depreciating assets. What I mean is rather than buy the expensive car, the flashy dress, or the expensive vacation, which is all good.
You see a lot of this changing. Sorry to come in over there, but I mean, you see your family members, friends, you see the world around. You see that quintessential Indian saving mentality, prudent mentality. Do you see that changing? And if yes, does it worry you?
It has changing. Previously, there was no opportunity. You saved it under the pillow or in a gold bar or in real estate. The world has changed in that sense. You got so many opportunities as we've seen through SIP investing in India out there. A lot of young people want to live for the moment, and I have nothing against it. I mean, if that's what you choose to do, that's your right to do as you please. But if you want to be financially free by the time you're 50 or 60, you got to do some basics. The basics is, save a little bit of money, invest that money, invest in appreciating assets, at least where there's a chance of appreciating and not depreciating. And if you look back and study history, you'll see equities is the best long-term return over the last 30, 40 years. They live almost 2-3 basis points better than almost any other asset classes. So if you're young, you want to actually pray for a bear market like we had recently or a bearish market because you can buy stocks cheaper. Yeah. Why would you want to buy stocks more expensive? You want to buy it cheaper. If there are people like me, you want to pray for the market to go higher. But if you're young in India, you want to pray. So when the market fell, it was a good time to step up to the plate and buy, in my opinion. So my advice to all investors, especially the younger set, is other than do the basics right, save, invest, buy appreciating assets, is take a long-term view of this thing. It takes barely a generation. It's really hard for people to believe, but barely a generation to go from middle class to the money class. If you can invest and compound that money successfully, over a 30-year period, money invested successfully can become almost 1000x. So no matter what amount of money you start with, you could end up fairly rich at the end of the 30-year period. And today, if the median age in India is 28 or 30, you want to think about how to retire, how to live your life when you're 60. So the time to do is to start now.
Absolutely. And also you need to be in the right set of investments, right? Or do you think time takes care of that? It's okay if you're not in the best stock or the best sector, or maybe even the best asset class. When over long periods of time, as long as you're invested in the right assets, does compounding take care of most of things?
It actually doesn't. Compounding does, but compounding only happens with the right category of investments that you do. It has been proved over many years that equities are the best return. So I would say
within equities, because a lot of time and effort and stress is taken on being in the multi-bagger, finding that right multi-bagger.
And you should do that. Like, there are two thoughts to it, Surabhi. The first thought is that if you don't have the time, you're busy in your profession, you're a lawyer, you're an engineer, you're a hairdresser, you have no time to do that, buy an index fund, as Warren Buffett has said. Buy an index fund. If the index doubles, you'll double your money. But if you're more passionate about money, more passionate about making stocks, more passionate about understanding investments, then invest directly. But do it like a full-time profession you will. But there's an enormous difference. I mean, someone who bought Infosys in 1991 or bought, say, some other Bombay Dyeing, say, to give you a bad example, in 1991. I mean, the returns are so dramatically different that it almost doesn't believe that you were in the stock market. So I don't want to ever underestimate the power of great stock picking. That's what has made a difference in all our lives. So if you're going to be full-time in the market, you damn well pick good stocks. Don't pick the popularity of the day or the moment and buy those stocks. Buy, as again, Warren Buffett, who taught me so much in my life, has taught us that in the short run, markets are what they call popularity machines. What is more popular works. But in the long run, it's a weighing machine. So you want to buy good quality businesses, just like you choose your spouse perhaps with a lot of care. You want to choose your stocks with a lot of care. Good return on investment, good characteristics, good return on capital, good payout policy. There are all these things that you look for in a great business, free cash flow. You should be looking at that. And I can't emphasize that more importantly, that you cannot pick any old thing and expect to get rich. You have to pick great stocks, great businesses, and devote your time to it. And if you don't have the time or the wherewithal to do that, then by all means invest in an index fund. That is your second line of defense. Sure. But don't think you can buy anything and expect, hey, I'll be rich in the next 30 years.
You have given us a great corollary or anecdote. Picking the best stocks is like picking your spouse. You don't want to pick just the most popular person in the room or the most popular stock in the room, right?
Shouldn't do that.
You shouldn't do that. Look at, far
the
more
hottest looking girl doesn't necessarily make the best spouse, maybe. I don't know. Or the hottest looking guy.
hottest looking girl or guy doesn't necessarily make the best spouse. What a headline, really. Okay, so now with that out of the way, I do have to get your perspective a little bit on where we are now, because I think a lot of people, especially people who came into the market post-COVID, have patiently sat on the sidelines, watched this market do its thing for the last 5 months, right? And I mean, this month has been better. March has been, of course, better off. And you've seen so many cycles. So where are we in the cycle? Was that a post-COVID bull market that's ended and now is a new consolidation phase, or was that a correction in an ongoing bull market? Where are we, and what is this?
Yeah, the good news to me is that, in my opinion, again, these opinions can be wrong, but in my opinion, we're in an ongoing bull market. What happened was the first correction in 4 or 5 years. It was particularly severe, and market correction is always severe. It always kind of panics you and tests your conviction, tests your patience, which is all the things that it did. But they are short, sharp, and swift. As you saw, the index fell very sharply and very swiftly, almost without respite, 800,000 points a day after that. But my feeling is that that is just a correction in a bull market, not the topping of a bull market. The reason I say that is, even when the fall started, individual stocks were making new highs, new all-time highs. Bajaj Finance, United Phosphorus, Shree Cement, so many companies, good high-quality businesses were making new high. That would typically not happen in a bearish phase of the market. Secondly, more importantly, in the last 60 to 90 days, I put, I had the road, rubber meet the road, went and visited a lot of companies, just try to get feedback on what things are in corporate India out there. And almost universally where I went, people are talking about expansion, talking about growth, talking about margins, talking about profitability. So this was more of a market event than an economy event. There's very little leverage in the system. Banks are not leveraged. The stock market is not leveraged. So it was just a correction of valuation, which had probably become excessive, took place, and now we're resuming the bull market that began in 2021.
Well, that's really good to hear, because yeah, absolutely. I mean, we couldn't really pinpoint an economic crisis or a financial accident which triggered this. It kind of just happened on its own. On valuations, and that's why it's a little important to understand both valuations and the power of flows. Domestic investors were pretty much buying throughout, at least from the mutual fund side. They were pretty much buying throughout the fall. And yet the market fell because we were being hit by 8,000 crores, 10,000 crores of foreign selling on a daily basis, right? So it's probably too difficult to write that off entirely. And now they've stopped selling. In fact, now first trickle of buying has come through. So while we can't predict flows, perhaps we can't underestimate the relevance also, right? And what do you
You can't. I appreciate that, and a lot of my friends pay a lot of attention to the FI number, which I really don't.
Okay.
Because anytime there's a transaction on the stock exchange, there's a buyer and a seller. So if the foreigner is selling, someone is buying at the other end. Stocks don't go in a zero hole on the ground. I mean, there's always a buyer at the other end of the stock. So things are being bought. Someone who thought it was expensive was selling it or booking profits. Someone was thinking it's value and he can make money, so he was buying it. So, that takes it. Of course, it's important. I'm not denying the importance of the FI number out there, but I don't particularly pay too much attention to it. It's just one of the things we look at out there. What we particularly pay attention to is on the ground, what's happening. How is the company dealing with the Trump tariff? How is the company dealing with inflation? How is the company dealing with the changing technology environment? I think those are more relevant questions for an investor to ask in a bottom-up manner. And I think that's just noise that you can't control. If they're going to sell tomorrow, how do you control that? If oil spikes up, you can't control that. If Ukraine war ends or does not end, you can't control that. But you can control what you buy. And you want to buy those businesses that are, doing good, bulletproofing themselves, and which is what I've done, which is what's been very successful over the last few years.
Fantastic. Take your point completely. There's always a buyer on the other side.
There always is. So, what does it matter?
The color of money doesn't matter. There's someone putting in the money.
Psychologically, it matters, but actually it doesn't matter.
Okay, fair point. Now to sort of press on that, the buyer on the other side, in this so-called correction phase, the buyer has largely been Indian, right? Domestic institutions coming in and pumping in money. Now, again, in your 40-year-old career, what do you make of this kind of domestic change, the ownership of the market changing? And this ties in with the valuation question as well. I mean, sometimes you would talk to fund managers and off the record or off air, they'd say, what do we do? I mean, we're getting 40,000 crores of equity inflows every month. I mean, how much cash level can I hold? I have to buy. So not today, but could that sort of become a bit of an issue or a situation for the market?
I've been 40 years in the market and I've gone through my own phases out there. But I'm telling you, the more I visit, I've traveled a lot across this great country of ours, visiting companies, visiting people last night. This country is oozing opportunity. I mean, there's so many businesses that are going to be built which are world scale, brands that are going to build world scale. So there are a lot of businesses that you can start investing in even today. But the more important point I made to you earlier was that India is a young country. And if you're a young country, you should be happy when prices are going down because you're going to buy things cheaper. It's like your mother said when you go shopping, you ये चीज 98 में खरीदना. तो अगर आपने 98 में मिला, तो it's better than buying it full price for them. So this correction gave you that opportunity to load up on the stock. And I am thrilled beyond belief that Indians didn't panic in this sell-off and they stayed true to the faith, they stayed true to the country and invested the money. And that's the correct attitude to take, that they are investing not for the next quarter, the next 3 months or the next 3 years, despite what's going on with Trump and company, but they're investing for the next 10, 20, 30 years of their lifetime. They're investing for their retirement, their kids' education, their parents' retirement, all those things they do. So I think it's been, the shakeout has been good. It has tested you. It has, proven that you have a conviction in what you buy. And there's no something called easy money on the Lal Street, as everyone thinks that I buy today, make tomorrow, which had gone on for a few years. But all the veterans have told you that, wait, when the correction comes, people will panic. But I think if they hold true to the flag and, I think it's great. I think the domestic money prospering or domestic India is great. We welcome foreign money, we welcome foreign capital, but they have a right to sell and I don't begrudge them that.
So absolutely, Ramesh. I mean, I completely agree with you. May this wave of domestic money, may it become a tsunami and may it continue for all our sakes. But my question was more sort of regarding valuations and whether so much of domestic money continuously coming in the market, whether that will sort of create its own valuation challenges. I mean, what's the range for India? Could we?
Surabhi, the market has a self-correcting mechanism, which we just saw. I mean, the index fell, 10, 12% from the peak. So it has a self-correcting mechanism built in. When valuations get too high or too stretched, someone on the other side will say sell, and it cannot be absorbed by the market, which is exactly what happened. So why worry about it? Market has a self-correcting mechanism. If you take stocks to unbelievable heights, the short seller will step in, or the promoters will sell in, or the insiders will sell in, and want to encash it. So that will act as a natural check on the market, which it has done. As long as there's not any undue amount of leverage in the system. There was, I think, 70,000 crores of margin funding, which is the size of a small mid-cap company in India today. So there's no leverage. The banking system has no leverage. The government had fiscal restraint. So, in fact, money was tight. So there was no reason to believe that this would be a long-lasting bear market. And market will correct itself. Anytime the valuations of something become excessive, people step in and sell, insiders sell, someone sells, and that creates a buying opportunity. So for the younger set, particularly, I want to focus on the younger set. You'll get an opportunity to buy stocks cheap, and you want to buy those high-quality businesses when they are cheaper rather than when they're more expensive. Don't assume or base your day on the fact that you made money in a particular stock in 2 days or not. If it went up today, I had a good stock. It went down today. That's the wrong way to look at it. Think of, as Warren Buffett taught us, that owning a piece of the business, that I'm owning, just like you won't sell your business if you owned it, or a real estate because the price fluctuated out there. Same thing, you're buying a piece of the business. The fluctuation is the market's randomness, that one day it offers something to you cheap, one day it offers you something expensive. But you want to look for the fat ball outside the off-stump you can hit for a 6. That's where you make money.
Absolutely. So let's get to that. And I mean, that's your personal favorite passion as well, picking the right kind of businesses. What excites you the most? And also, if it was just a correction in the ongoing bull market, then will the leaders continue to be the same, or could there be change? I mean, you picked PSU stocks, I think, ahead of most people in the market.
No, I was lucky on that. Would they continue to lead? Yes, I think they'll continue to lead the bull market. There's been some evidence, again, the defense stocks, flashing up as we speak. So I see what has happened that perhaps we don't understand is, I think this government understood correctly that there's no public favor in terms of disinvestment in India, privatization. I think successive governments have tried that and it has failed. So they've done the next best thing, which is improve the corporate governance of these companies. So you look at the earnings profile of how the earnings profile have changed of these companies. So that has really helped bring prosperity to the PSU index group. So having said that, yes, I think they'll continue to lead the bull market. Where are we investing in the public sector space? Maybe in the construction companies, maybe in some of the other names that we're finding value out there. So that is one sector that we're looking at. I find suddenly and surprisingly for me a lot of the pharmaceutical sector.
Yeah.
Because what I'm finding is that a lot of Indian companies are not doing the CDMO work or the basic generic drug, which is also fine, but they're also building intellectual property, okay, which I find astonishing that India has come that far that you're building actually patented medicines and so we're investing in some of those companies. And then the third one, which I'm very bullish on over the next 5-10 years, is this public digital infrastructure space. Because I think the one thing India is teaching the world is the India stack, the digital infrastructure, whether it's payments, whether it's transaction, commerce. I mean, anyone who's gone to the airport in recent times know how cool Digi Yatra is, the way you smooth through the airport. So India is way ahead of other countries, and that product will not only be more intensified in India, it will also be exported. So I think there'll be an opportunity in that sector too.
But are there enough opportunities? There are few companies, Protean obviously is one of them, but does the listed market offer enough opportunities to play digital infra?
There are plenty of opportunities. When Infosys went public, there were 1 or 2 opportunities, and more companies came. So there will be more companies. There are enough right now. You just have to look. And I'm not recommending any particular stock, just to be clear. But I think there will be opportunities in the intellectual property companies in pharma, for example, may be challenged by Trump's order.
That's what I was
But
wondering,
I think they will overcome it. It's just the basis is so cheaper in India that you don't want to give medicines to America, which are already expensive, 3 times more expensive. It doesn't make any sense to me. So that's why they will have to change. The MAGA crowd will have to change ultimately. So I think there's enough pickings. The valuations are at your favor. It's almost like the wind is at your back. So if you are willing to invest over a long period of time, this is as good a time to get into it.
And PSUs, just to kind of press on that point a little bit, it's a very wide basket from defense to railways to, it could be financials, etc. Within that, what excites you the most?
Well, I think the problem that a lot of people who didn't like PSUs made was they bunched them all into one category, the PSU basket. And they were, like you said, assortment of companies. In the commodity businesses, they were in the construction business, they were in the defense, they were in the rail. And you can't do that. It's so silly. I mean, I always point that out. I said, and Surabhi, I just have to remind you, because there's been a lot of press, hatred against PSUs, as you must find when you are anchoring the show.
Yes.
But I go back to 1991 when Manmohan Singh first announced the PSU liberalization policy, and in the speech to Parliament, he said, I will be disinvesting some public sector stocks so that they'll be more efficient. In that basket of stocks, and I'm only talking historical stuff, I bought 3 stocks, among others, but 3 stocks that I bought. A company called CMC, which was in technology, a company called Bharat Electronics, which was in the defense space, and a company in Bharat Earth Movers, which was in the railways and a whole bunch of heavy moving equipment, whatever. If you go back and study the history of those 3 companies, I think today, Bharat Electronics may be 200 to 300 baggers, even today. And more importantly, what people don't understand, there is absolutely no dilution that is taking place in the equity. So the same level of capital, they've sustained the growth. Bharat Earth Movers, it's really hard to believe, was maybe a 50 crore market cap company. Today it's one of the giants in this field. CMC has been merged with one of India's leading companies, TCS. So I had this reference of making a lot of money in the public sector in 90. So when these got disinvested in 2020s, the railways and the defense PSU, we could see they were rich for the pickings. So I would say avoid the mistake of clubbing all of them together, because you get MTNL also along with some
maybe
dots in there. So, but if that's your job, I mean, that is your job as a stock picker. What are you doing? If you're lazy, not going to look at the stocks, then you're being lazy. You're not a good value investor. So that is my call. I'm saying that these individual stocks will do well. What excites me pretty PSU, as I told you, some construction businesses excite me, some defense business still excite me.
Okay. In digital infrastructure, it's interesting that you said public digital infrastructure, not overall, internet businesses or internet companies. There's been so much, happening with them. They go up and down, and the great debates rage in the market around a Swiggy and a Zomato, etc. Overall internet, not so much, more digital public infra. Why is
more
that?
That because that's where the great growth opportunity lies for India in making life easier for the common citizen. In the internet businesses, I am all in favor of them, but I'm not finding great valuation comfort in. They are still at, they are at exorbitant valuations in my belief. So we bought some of them, but we haven't bought all of them.
Okay, which brings me to the question of styles to follow, maybe in this leg of the bull market, in the new global reality that we discussed earlier. What has been your personal favorite style? Is it growth? Is it value, or is it a mix of both? And more importantly, to a lot of the youngsters out there, what is the style that you would tell them to perhaps, look out for?
That's actually an easy question, Surabhi. There is only one type of investing, that is value investing. And that encompasses everything. Like you say, I'm a growth investor, but growth is a component of value. So you have to look for value. अपने को रुपए की चीज 20 पैसे में ढूंढना है. We always want to find stocks that are cheap. There is no other. If there was another principle, the market would shut down over a period of time. See, people make the mistake of thinking that this is a T20 game. That every ball bowled has to have an attacking shot done there.
Have to hit a boundary, in every ball.
What Buffett has taught us, and this is a lesson that all investors should learn, that the market throws you a ball every day. Okay, it says Reliance at 1600, LIC at 1200, Nasdaq Dock at 2200. You don't have to do anything about it. You can just let the ball pass. There's no called strikes in the game. There's no outs. You just wait it till you find something really attractive in your comfort zone, and you can hit it out of the park for 6 or make 10x from that money out there. So approach it like that. Don't approach it that I have to make money every day. Great ideas are very rare, but once they come, at that time you want to load up the truck and buy as much as you can, and that will take care of everything. I'll give you one of the best examples I can about someone who did that right, and that is Charlie Munger, who passed away recently, and he gives this example of what he did. He said that he used to read a paper called Barron's for years and years, never acted on it in 40 years. It's hard to believe. I'm not expecting that glacial level of, but 40 years. Then finally he said he found something that he said it was a no-brainer. He knew it would do well. So he put $10 million, which is all the money the company had at that time, in that one particular stock. And he was right. It went to 40 million or 50 million in the next couple of years. He encashed that and he gave it to his newfound partner in investing, Li Lu. And Li Lu made that 40 million to 400 million. So 10 million became 400 million over a lifetime by investing more judiciously. So this idea that you have to bat on every ball is a misnomer in the market. Wait for the fat pitch to buy it. I'm not saying even I do it, but I try to get better and better at it. That I want to find, the fat ball outside. Please, investors, remember that you don't have to win every day of the game. You don't have to win even every month of the game. Occasionally, you'll get that fat ball outside the off stump, and
hit that one for 6.
That's when you got to hit for the 6. So that will come to you maybe once or twice a year. So. But you have to watch the market every day. You don't have to act every day.
Yeah, which brings me to something more about the man that we know and the man that we don't know, Ramesh Damani. What is your average day like? Do you sit and watch the market every day? Do you talk to companies? How frequently? Even how do you spend an average day?
Well, that's what I do every day. I'm still pretty much, though I'm closer to retirement age, I still enjoy the markets. It's something I really enjoy. So. I'm full day is basically done with something in the market, either watching the screen, looking at my positions, visiting companies, or mentoring a lot of young people who happen to come down to my office. So it's a blessed life. What can I say? If you enjoy what you do, you're blessed. And I don't really begrudge going to work in the morning, as some people feel. I really enjoy, and I think Warren Buffett gave a very good example, which I'll repeat because it makes a lot of sense. In one of the conferences, someone asked Warren. He says, how do I become like you, but only faster? And Warren said that, I'd give a lot to get back your hair on my head. I'm not really in a hurry. In fact, I would give a lot of the money that I have made today, as long as I keep my intelligence with me, I'll give the money back, but you give me your life. And I can live 30 more years. I know I'll make more than that back over time. So I feel the same way. That this great world, global Indian experiment is unfolding of capitalism. We receive a setback right now, but I wish I could watch this experiment for the next 20, 30 years. I feel the same way. There'll be such exciting times for companies. Global businesses will be built. Global trade will happen. New billionaires will be minted. So it'll be a lovely time for new investors to figure all this out.
So, I'm going to ask you some quick, rapid fire type of questions. Maybe the 5 favorites for Ramesh. I'm making this up as we go as well. Favorite book?
I think generally anything about Buffett and Munger is a good place to start with. There's a new book that's come out called Unscripted Buffett, or Scripted, or I forget now what it is. Unscripted Buffett and Munger, which is verbatim records categorized by subject of all they spoke on the AGM.
Oh, okay.
It's a brilliant read. It's just what they said, direct, unfiltered. You can read what they said. So I would recommend that book to investors. A very young friend of mine sent that to me. Thank you for sending that to me. But anything on Buffett and Munger, I must say the 2 books that I enjoyed in my childhood for example, was a book called The Spirit of St. Louis,
Mhm.
which is a Charles Lindbergh flight across the Atlantic at that time. And the rest will remain. But that, for my boyhood, that inculcated my love for adventure by reading Charles Lindbergh.
Wonderful, wonderful. Favorite movie?
Favorite movie? There's a movie in America called Groundhog Day, where I forget the name of the lead actor, but it's a brilliant movie where he kind of lives the same day every day until he breaks out of that day. And I must have watched it half a dozen times.
Wow, I know what I'm watching this weekend.
It's a great movie. I would encourage you to watch it.
Any favorite actors? Indian, international, global?
Any actress?
Actress? Okay.
No, I mean, I'm putting myself. I like some of the old-time actresses in the 60s. I think Sharmila Tagore always had a particular resonance with me. I think Gwyneth Paltrow. I mean, there's a lot of people. I admire the work they do. So.
Lovely. Like I said, we're trying to get to know the other side of Mr. Damani as well. Your favorite concept of a holiday, idea of a holiday, what would it be?
Just travel itself. I really enjoy travel. So in, say, the last 5 years, I must have been to a lot of different countries. For example, I went to Armenia 3 times in that time. For some reason, it happened I went 3 times. I went to Azerbaijan. I went to Japan. I went to Singapore for work. I went to Africa. So I enjoyed I think more than a favorite destination, I enjoy meeting new people, new cultures, new food. Just travel itself is very ennobling for me.
Fulfilling, I guess. I completely get that. If you weren't such an ace investor and stock picker, what would Mr. Ramesh Damani be?
As my wife said, I'd probably be driving a truck.
In the US?
I wouldn't get a job anywhere else. No, we're very lucky. People who understand markets probably are not good enough to do other professions because they're so focused on money and what will happen tomorrow and thinking seems ahead. So probably be this thing. But having said that, I think I would probably enjoy law or teaching because it kind of interests me. So
and we've benefited so much from the wisdom that you've shared with us over the years.
Kind of you.
So I can picture you as a professor, as a teacher, absolutely. So yeah, those are the 5 things. And speaking of money, at a sort of wider level or a deeper level, maybe, what does money mean to you? You've earned so much of it over the years. What does it mean?
I think in my business in particular, Surabhi, we measure success by money. I mean, how do you measure success? I mean, my niece, for example, is my sister's daughter, Smriti. She's a documentary filmmaker, barely 40. She was nominated this time for an Oscar.
Wow.
40 years for an Oscar for a movie called I Am Ready Warden that she made. She didn't win it. But you can measure if you're a good documentary filmmaker by the Oscars you won or the nominations you won. If you're a great mathematician by winning the Fields Prize, for example.
The awards,
If you're winning the 100-meter dash by the Olympic gold medal, for example. In this business, you're measured by the number of zeros in your bank, which is correct, which is the way it should be.
So it's a measure of success.
It's a measure of success. But other than that, what will surprise you is that I have so many value investor friends across the spectrum, and they all live fairly modest lives. I mean, it's not that we believe in being hedonistic and spending it. I think the concept that we all believe is what Gates and Buffett and so many in India now have done. Ashish Dhawan, for example, has built Ashoka University, Nimesh by Flame University. So as trustees for wealth, that we should ultimately be trustees for the wealth and give back because we've been so generous in receiving so much, and we've been, as I said, the first generation that enjoyed the fruit of liberalization. So I think money is very important as a measure of success in my business. How good are you? When you match your intellectual wits against the best and the brightest, where do you stand? And amazingly enough, a lot of the fortunes in India match global fortunes now. Not mine, but particularly for the good people in the stock market. And that's truly inspirational for me. And I think money means that I am now being able to compete with the best in the world. And I would not use that as an end in itself. I think as most good investors say, that it must do good. It's, you need to spread it back.
You mentioned a couple of names and all veterans. So as you look at the new generation, the new crop of money managers or the new stars or the next big bull on India, who comes to mind, or who sort of catches your attention the most?
I mean, I don't want to put names because I'll put a lot of pressure on these people. They don't do it. But I see incredible amount of diversity of young people, very serious, some running mutual funds, some running proprietary capital. So there's no dearth. I mean,
You can give 1 or 2 names. It might be encouraging as well for the whole lot.
I'll pass on that, Surabhi, because
Okay.
if I mention 3 but don't mention 2, they're going to be angry with me.
Yeah.
I'm not
Okay.
interested in mentioning names.
Okay.
But do I see names? Definitely. Do I see stardom for them? I definitely see stardom for them.
Yeah.
And they will be in the great traditions of great value investors, who compound money over long periods of time. So I'm very optimistic that I was very lucky. So when I came to the markets, in the first few months I was in the market, I met people like Chandrakant Sampath, R.K. Damani, Nimesh Shah, Durgesh Bhai, all turned out to be the greatest value investors that India has produced. Okay, how lucky was it that within the first month I met all of them?
Yeah.
Rakesh Jhunjhunwala, not to forget his name.
We really miss him.
Yes. So met all of them in the first few months of coming out there. What I'm seeing increasingly, and that is what I hope the legacy will be of this show and the other shows, is that a new generation of great value investors will emerge in India. And I'm already seeing the emergence of that. So I'm very hopeful that this crowd will be replaced by a bigger and better set of value investors, and that Indian value investing will become mainstream as it has gone in America.
Okay. I mean, 60 years plus, a fabulous, very illustrious career. When you look back, what do you see as maybe the highest point, and what is something that maybe you would have done differently?
I think there's a saying in Hinduism that says that there are no mistakes in life, only lessons learned.
True.
So, Surabhi, I think I've learned lessons. I wish I'd been a bit more bolder, a bit more, assertive in my thinking. I was part of a middle class background, so you tend to be safer, tend to stick to the shore, instead of some of my friends who showed me the magic of being bold out there. So maybe I'll impart that for the next few years, maybe the next
In terms of the stock calls that you also eventually took.
Stock calls, the amount you bought, how you saw the market.
Yeah,
It really bothers me that I have not been as successful financially speaking as some of my peers. And again, I say it's not because of the money. It is because, you have to measure yourself against the best. And it's a good calling. It's not something bad out there. Surabhi, I just like to share with you what I wrote particularly for this show.
Oh, wonderful.
I talked about having a blessed life. And I wanted to end with saying that what are the blessings that I'm truly grateful for, which I am. I've really been lucky generation of India. And I want to share this with our viewers. This is an old Confederate prayer that I'll read out so I get it accurately. It says, I asked for all the things that I might enjoy life with. I was given life that I might enjoy all those things. I got nothing that I asked for, but everything that I hoped for. My prayers were answered. I am among all men most richly blessed. And I really feel blessed today. Surabhi, thank you so much for having me on the show.
Wonderful. So thank you so much. This has been an absolute pleasure. Thank you for taking out the time. Very, very enriching conversation. And it is this legacy from you that I think all of us, people younger to me, the future generations will want to know about, imbibe, and learn more from. So thank you so much for doing this.
Thanks,
Means
Surabhi.
a lot.
Thanks
Thank
always.
you.
Yeah.
All right, viewers. Well, that's a wrap on this edition, Season 2, Episode 1 of Market Cafe. We'll see you again. Keep sending us your feedback, comments, anything else that you want to talk about, and we'll incorporate that in the coming conversations as well. Thank you so much.